In terms of equipment financing, usually the term is dependent on the useful life. Banks will finance 80% of the purchase price or 100% if it's leased. If you're installing, let's say, a manufacturing line where you got a paint booth, you got several pieces of equipment you got to bring in, there's electrical work that needs to be done, and it's all related to equipment, it's not a real estate related project, consider an interest-only period so that you can draw down as you need the cash to buy and spend down for the project. Maybe it's 3 months, maybe it's 6 months, but consider that, gives you a chance to work out the bugs, get the new line up and running and generating some cash flow from it. In terms, you can always refinance equipment debt. Usually a bank may consider an equipment appraisal at that point based on the orderly liquidation value. And again, with projects that might be larger, or let's just say you're in a capital intensive industry where every year you're going to spend $500,000, you're going to spend $1 million. Ask the bank to consider an equipment commitment so that you can draw down every year throughout the year rather than having a new settlement every time you want a loan. Draw down throughout the year off this equipment facility, and at the end of the year you can term it out into one loan or one lease. That's an option for you to consider. And again, as we talked about with manufacturers, any larger equipment loans, same deal with the tax-exempt financing. You can do that. The only thing with tax-exempt financing for the equipment, usually your useful life or you're terming it out over 5 years, 7 years, those upfront fees get harder to make back over a shorter term. So when you have a tax-exempt loan for 20 years, you can spread out the transaction costs over 20 years versus a shorter term for equipment.